What's up, everybody? It's the Digital World Podcast, and you have to watch this video by Stanley Druckenmiller and see what he has to say. It'll literally um, blow blow you away. So take a listen.
I will be stunned if we don't have a recession in 23. Don't know the timing, but certainly by the end of 23. I will not be surprised if it's not larger than the so-called average garden variety. And I don't rule out, not my forecast, but I don't rule out something really bad. Why? Because if you look at the liquidity situation that has driven this, we're going to go from all this QE to QT. We're following an asset bubble. We've been doing all this running down on the SPR, which is now, that's the Strategic Petroleum Reserve. It's now below 84 levels, even though obviously oil consumption is much higher. We've had a bunch of myopic policies that have actually delayed the liquidity shrinkage. QT has been almost entirely offset by Janet Yellen running down the Treasury savings account. By the way, pretty amazing policy. She could have sold 10 years for under 1% during this time. Instead, she runs down the Treasury savings account. So all that has masked the liquidity shrinkage, but it really comes into full gear. And she can continue this for a while. We could do the SPR for a while, stimulative stuff. But by the first quarter of 23, it kind of goes the other way. So our central case is a hard landing by the end of 23, but I don't know. I've been wrong on a lot of things. I could be wrong on this, but since I do it for a living, that's our forecast, which is a recession in 23.
Recession in 2023 by the end of the year. If you see what's happening now, there's a lot of things that are happening, and there's a lot of monetary and fiscal policy that went into effect in the last 3 years. And you saw this like boom during that pandemic time period, and now you see a lot of tightening happening. And you'll see these different charts that I'm about to show here. But it's quite concerning, especially given the state of all these banks. Here you see is the swap lines um, uh, at the that these banks are using. And here in this tweet it says the swap lines were unleashed, funding stress skyrocketing in the banking system after the collapse of SVB. And I believe this is the Fed's open lending, or might be the Fed's overnight lending that they have open to the banks. And what you can see here is, I mean, it's the USD FRA OIS spread, a measure of the interbank lending. Yep, so it's the interbank lending relative to risk-free rates. And so you can see in comparison, right, to COVID, to the repo markets right before the pandemic, the EU crisis, and Lehman Brothers. And we had a major spike um, here recently in the last couple of days. And so we'll see. And this is, um, I think you have to take it as also um, as a way of comparing, right, relative to everything there. But this is not the end all be all. But you can kind of see where things stand. Okay, so here on the next one is another tweet about small banks. So here you see borrowings as a percentage of reserves rising because cash and assets are low, especially for small banks. You see the large banks are here in the light blue, and small banks are in the dark blue. So, interesting to take note of that. It says divergence recently between small bank and large bank lending growth. You see that the large banks um, are below there. And so you see this one is share of all bank loans by percent, and U.S. small bank loans per percent of GDP. And so you see that, and then the small and medium sized banks account for 80% of total commercial real estate lenders. And so those are some interesting stats there. Another thing is what's happening in France. There's a lot of protests happening against the President Macron there because of his policies. I mean, France is a cesspool, and there's some chance of, oh, if we got rid of King Louis, we can also get rid of President Macron, and that's apparently what the chants are saying. But things are, I mean, you see in Europe and all these other parts of the world, it's escalating, escalating. And another thing to remember too is that Amazon doubled its workforce from 2020 to 2022 based on unsustainable demand from STEMIs. Now their workforce needs to decrease to a level consistent with true demand. And now Amazon is preparing to lay off another 9,000 workers. And so this isn't going to end. And this is the beginning. If you increase your workforce for more than double, it's going to get pretty gnarly. And so this is quite unreal. And I think there's a lot more pain to come. Here you see, so there's been recent news that former President Donald Trump was supposedly going to get arrested tomorrow, Tuesday, 3/22. And it's interesting that this comes in light of, the whole banking stuff that's been going on. And it's not a coincidence that it always seems like when there's a banking crisis, oh, they try to distract you with all these other news. And now it's coming with the Trump indictment. They're desperate to get people to not focus on the fact that the U.S. financial system is effectively insolvent. And here you see that banks hold over $600 billion in unrealized losses. So if everyone tries to pull out their money, it'll collapse. And that's true because with fractional reserve banking, they lend out more than the actual holdings they retain. So with people in their accounts, if they want to take out all their money, the bank doesn't have all that money. So if everyone goes in at once to try to cash out, that'll be really, really bad. So, and here you see how much money is in unrealized losses. So that's currently where we stand. Here, this was an interesting tweet. There are 31 million Americans, a handful of billionaires, and thousands of investment bankers that have no idea their pensions are indirectly invested at Blackstone. Pension funds and insurance companies are next to be bailed out. Folks, we're in a crisis. And I think you've got to start getting ready because it's coming fast and it's coming quick. So, that in mind, thank you for watching. Like and subscribe to the channel. It's the Digital World Podcast, and I'll see you in the next episode.